What if I told you? The story of money is darker, stranger, and far more powerful than you've ever imagined. Before credit cards, before banks, before even the first coin, humanity traded in secrets, blood, and survival. Tonight, we uncover the hidden history of money, the empire it built, the empires it destroyed, and the price every civilization has paid. Long before paper, before gold coins clinked in royal treasuries, money wasn't even money. It was trust. It was survival. In small villages, people bartered. Grain for cattle, stone for tools, salt for survival. No coins, no banks, just human promises. But trust is fragile, and that fragility would change the world. One thing stood above all as the first true form of wealth: salt. Yes, salt, the crystal of life. Soldiers were paid in salt. Kingdoms fought wars for it. Even the word salary comes from salarium, the salt allowance given to Roman soldiers. Imagine, the most powerful empire in history built its army on something that melted in the rain. But then, gold appeared, untarnished, eternal, immortal. The world had never seen something so rare, so shining, so universally desired. Pharaohs lined their tombs with it. Priests wore it as a symbol of divine power. And suddenly, wealth wasn't about survival anymore. It was about control, power, immortality. Around 600 BC, in the kingdom of Lydia, the world's first coins were minted. Tiny discs of electrum, an alloy of gold and silver, stamped with the king's seal. For the first time, value could be carried in your pocket. It was the birth of currency, and the beginning of greed on a scale humanity had never seen. While gold ruled the temples and thrones, silver became the blood of empires. The Greeks paid their armies with silver drachmas. The Romans built trade routes stretching from Britain to India, fueled by silver denarii. Silver was money you could touch, spend, trust. But trust, once again, would become the empire's downfall. Rome, the richest empire of its time, seemed unstoppable, but greed infected its veins. To pay for endless wars, Roman emperors diluted their silver coins with cheap metals. The denarius lost its shine, its weight, its value. Citizens began to whisper, "The money is fake." And when money dies, so does empire. Imagine holding a coin, once worth a loaf of bread. Now, it barely buys crumbs. Inflation spiraled. Trade collapsed. Soldiers refused to fight for worthless pay. And as Roman money crumbled, so did Rome itself. The greatest empire in history was eaten alive, not just by enemies, but by the corruption of its own currency. But money was far from dead. In the East, something revolutionary was happening. The Chinese, under the Tang dynasty, introduced the first paper notes. Paper? Imagine the shock. Worthless fibers holding the power of gold. At first, people laughed. Then, they obeyed. Because money, after all, is only belief. And belief can be commanded. Paper money spread like wildfire along the Silk Road. Merchants no longer carried heavy silver bars. They carried notes, promises of payment. But here lies the danger. A promise can be broken. And broken promises would haunt money for the next 1,000 years. As the Middle Ages dawned, Europe turned back to gold with a vengeance. Kings minted golden florins and ducats, symbols of their eternal power. Wars were fought not just for land, but for gold mines. For every ounce of gold hidden in vaults, empires rose. For every ounce stolen or lost, kingdoms fell. But behind the thrones, a new kind of ruler was rising: the banker. Families like the Medicis of Florence discovered something kings had missed. Money could create money. Lending, interest, debt, tools invisible yet stronger than swords. The Medici didn't just fund wars, they owned them. By the 1600s, banks in Europe began issuing paper banknotes, not backed by salt, not even by silver in hand, but by promises. A slip of paper, trusted more than coins. Nations now had power to create wealth out of thin air. But thin air is dangerous. Too much of it. And reality breaks. Every step forward had a shadow. Gold fueled slavery. Silver bled colonies dry. Paper created debt prisons. Money, at every stage, was double-edged. Salvation for some, destruction for others. And still, humanity could not resist chasing it. From salt to silver, from gold to paper, one truth remained. Money is never about the object. It's about belief. But what happens when belief is controlled, manipulated, or erased? That is where our story now turns. Because the modern world of money is stranger than any empire before it. In the 1600s, the Dutch Republic became the world's first financial superpower. Why? Because they invented something unthinkable: a stock market. Suddenly, anyone, not just kings, could invest in voyages, trade, and empire. Risk was shared, wealth multiplied. But so did greed. Tulip bulbs sold for the price of mansions. And when the bubble burst, fortunes evaporated overnight. 1694. London was drowning in war debt. To save the crown, the Bank of England was born. For the first time, a central bank controlled money. The pound sterling became the backbone of global trade. But behind the polished halls of London, one truth echoed: whoever controls the money controls the empire. By the 1800s, trust demanded rules. Nations locked themselves to the gold standard. Every paper note promised real gold in the vault. A simple, solid idea. Too simple, because the world doesn't run on promises, it runs on power. And when wars came, promises would shatter. Across the ocean, a young nation was growing fast: the United States. By the late 1800s, the US dollar was tied to gold. But behind the patriotic symbols, the dollar was already becoming a weapon. Railroads, oil, steel, all built on borrowed money. And those who borrowed most ruled most. Then came chaos. Banks failed. Stocks collapsed. The people panicked. In the shadows, one man rose to save America: J.P. Morgan. A banker, not a president, not a general. A banker bailed out the US government with his personal fortune. That night, the message was clear. Money's true masters weren't in the White House. They were in Wall Street's vaults. 1913. To prevent future collapse, or so they claimed, the Federal Reserve was created. A central bank unlike any before. It could print infinite dollars. It could raise or lower interest rates. It could decide the fate of millions with a single policy. The US dollar was no longer gold. It was paper. And paper could be printed without end. But the illusion cracked. 1929. Stock markets crashed. Millions lost jobs. Breadlines stretched across America. People burned paper money for warmth. It was worth less than firewood. Suddenly, the world saw money for what it really was: fragile belief, shattered overnight. War reshaped everything. Gold flowed into America as Europe burned. By 1944, the US held 2/3 of the world's gold. At Bretton Woods, leaders bowed to reality. The dollar would replace gold. Every nation's currency was tied to the US dollar, and the dollar itself was tied to gold. America's money became the world's money. But in 1971, one decision shattered it all. President Richard Nixon went on television and declared the US would no longer exchange dollars for gold. Just like that, the gold standard was dead. Money was no longer metal. It was numbers, belief, trust in government. The age of fiat money had begun. But America wasn't foolish. To secure the dollar's throne, a secret deal was struck with Saudi Arabia. Oil, the black blood of modern civilization, would be traded only in US dollars. Every nation needed oil. Every nation needed dollars. And so, the petrodollar empire was born. Money wasn't just paper now. It was power enforced by armies, but fiat money had no chains. Governments printed, debt exploded, prices rose. A loaf of bread that once cost cents now cost dollars. And as the printing presses roared, ordinary people paid the price. Their savings shrank, their futures dissolved. Because inflation is the silent thief that robs entire generations. By the 1980s and 90s, money changed again. This time, invisibly. Credit cards replaced cash. ATMs replaced tellers. With a swipe of plastic, fortunes moved across the globe. Banks no longer just stored money. They became the architects of it, conjuring credit out of nothing. For the first time, money wasn't physical at all. It was digital. Then, disaster struck again. Banks gambled with trillions, and when the bubble burst in 2008, the entire world trembled. Families lost homes. Nations drowned in debt. And once again, the solution was the same. Print more money. Trillions of dollars created overnight. But each new dollar weakened the last, and faith in money itself began to crack. Out of the ashes, a mysterious figure appeared. Satoshi Nakamoto, an unknown genius, or maybe a group of them. In 2009, Bitcoin was born. A currency beyond banks, beyond governments, beyond borders. Limited, digital, unbreakable. For the first time since salt and silver, money was free from rulers. But freedom has enemies. Today, the world stands on the edge of money's greatest revolution. Central banks push digital currencies. Cryptocurrencies challenge them. Debt climbs higher than ever. Inflation whispers through every household. And the question remains, is money still trust? Or has it become the greatest illusion of all time? By this time, money was no longer just a tool. It had become the heartbeat of entire civilizations. In the mighty Roman Empire, gold and silver coins fueled expansion. They paid soldiers who marched across continents, built monumental temples, and fed the endless appetite of an empire that believed it would last forever. Each coin carried more than just value. It carried power. On one side, the image of the emperor, a daily reminder that wealth and authority were inseparable. But Rome's hunger was insatiable. The wars grew longer, the empire stretched wider, and the treasury drained faster. When pure silver began to run short, emperors resorted to a dangerous trick. They mixed the coins with cheaper metals. To the eye, the coins still looked the same, but in truth, their value was fading. Ordinary citizens suddenly found that their money bought less and less. Prices of bread, wine, and oil soared. This invisible enemy, inflation, was eating away at the empire's very strength. Meanwhile, on the other side of the world, another revolution in money was unfolding. In China, during the Tang and Song dynasties, people introduced something extraordinary: paper money. For the first time in history, value could be carried not in heavy metal, but on a sheet of paper. It was lighter, easier, and far more practical than coins. For centuries, it worked brilliantly, fueling trade across Asia. But there was a hidden danger. When too much paper was printed, confidence collapsed. Traders no longer trusted the notes. Markets spiraled into disaster, and once again, people learned the painful truth: money only works when people believe in it. This pattern echoed across history. Empires rose, empires fell, but the lesson remained the same. Money's true power doesn't come from what it's made of. It comes from trust. Fast forward to the Middle Ages. Trade was booming across continents. Merchants carried bags of coins, gemstones, and promissory notes. But every journey was filled with risk. Bandits lurked on lonely roads. Pirates stalked ships on the seas. Corrupt officials demanded bribes at city gates. At any moment, a merchant's fortune could vanish. Out of this danger, a new invention emerged: banking. In Italy, powerful families like the Medicis built systems to protect and move wealth. A merchant could deposit money in one city, then withdraw it safely in another. For the first time, wealth was secure, portable, and global. This system changed everything. Suddenly, merchants didn't need to carry mountains of coins across dangerous lands. Instead, their wealth could move with a stroke of a pen. But with banking came new questions. Who could be trusted to guard so much gold? Who decided how much paper represented how much metal? In Florence, Venice, and Genoa, families like the Medicis didn't just answer those questions. They rewrote the rules of money. They became richer, more powerful, and more feared than kings. Banking houses began issuing letters of credit, promissory notes, and bills of exchange. For the first time, money was becoming abstract, detached from the heavy coins of the past. Yet with this new power came new temptations. If banks lent too freely or manipulated trust, entire economies could collapse overnight. And collapse, they did. Time after time, financial panic swept through Europe. Fortunes were made in an instant and destroyed just as quickly. Still, the hunger for trade only grew. Europe's merchants set their sights on distant seas. Spices, silk, and precious metals were waiting in faraway lands. Explorers like Columbus and Vasco da Gama weren't just chasing glory. They were chasing wealth. Their voyages were funded not by kings alone, but by investors willing to risk everything for unimaginable returns. This was the birth of a new idea: capitalism. Money wasn't just about survival anymore. It was about investment, growth, and profit. Entire companies were formed to finance these risky expeditions. The Dutch East India Company, the British East India Company, these weren't just businesses. They were empires, armed with armies and navies, ruling lands thousands of miles away. Shares of these companies were bought and sold, giving ordinary people a chance to own a piece of global trade. For the first time, wealth wasn't only for kings and nobles. It could be shared, multiplied, and speculated upon. But speculation is a dangerous game. When too many people bet on the promise of riches, bubbles formed. Tulip mania in the Netherlands, where a single flower bulb could sell for the price of a house, proved just how irrational markets could become. One day, fortunes soared. The next, they crumbled. The world had discovered the intoxicating highs and devastating crashes of financial markets. Still, there was no going back. Trade had gone global, banking had gone powerful, and money had become the invisible engine driving nations forward. And yet, the story of money was only just beginning. For as the modern age dawned, wealth would no longer be confined to gold, silver, or paper. It was about to take on forms no one could have imagined. As the 18th and 19th centuries unfolded, the power of money expanded even further. Banks grew larger, governments printed national currencies, and stock exchanges became the beating heart of economies. But money wasn't just about coins or paper anymore. It was about trust in entire nations. The US dollar, the British pound, the French franc, each symbolized the strength or weakness of its empire. Then came the 20th century, a time of war, depression, and radical change. Gold was no longer enough. Nations abandoned the gold standard, and money became something even more abstract. A promise backed only by governments themselves. And soon, technology took money into the digital age. Credit cards, electronic transfers, online banking. Suddenly, billions could move around the world in an instant, invisible yet unstoppable. Today, we live in a world of cryptocurrency, digital wallets, and decentralized finance. But the truth remains. Money has never really been about gold, silver, or paper. It has always been about trust, power, and the human belief that something, anything, can hold value. And as history shows, that belief can change the world.